Hi, my name is Christina Robinson, and welcome to another edition of CMS Forex News. Today is Friday, January 18, 2008. Retail sales in New Zealand for November jumped to 2% from a negative measure in October, mostly due to the record level spending for fuel. Sales excluding the volatile components were up by a modest 0.9%. In the UK, retail sales for December fell into negative territory, signaling that consumer spending has receded as the anticipation of a slowdown works its way through the UK economy. Sales were down 0.4%, wiping away November's gains. On the year, sales cooled to 2.7%. In the U.S., the Conference Board Index of Leading Indicators measured negative 0.2%, an improvement from last month. And a bit of good news for the U.S., a second report, the University of Michigan Consumer Sentiment Survey, showed improvement in January, which helped the dollar pair some of its earlier losses to the euro. Agreeing with Bernanke's suggestion yesterday, the Bush administration today proposed a $150 billion package, pending support from Congress. He did not provide many details yet, but part of the discussion included $800 tax rebates for individuals and $1,600 rebates for households. Bush did note that there will be no tax increases in the package. The pound-dollar pair fell 200 pips off its level from overnight, with a large chunk of the fall coming directly after the poor UK retail sales number. The pair found support near 1.9510 after the consumer sentiment report helped the dollar gain slightly. The dollar-yen pair rose overnight from its low set last afternoon as global stocks recovered and investors returned to risk in the pursuit of higher-yielding assets. The pair climbed 100 pips to 107.56, but was unable to break through this level of resistance. As New York trading progressed, initial gains seen in U.S. equities were pared down, and carry trade flows reversed their climb. The pair is now moving sideways after setting a low near 105.90 on Wednesday. The pair has dropped 400 pips in the 4 sessions before setting that low. Since the start of the new year, the yen has been performing strongly as global equity markets are suffering in an environment of risk aversion and talks of a recession in the U.S. The U.S.-Canadian dollar pair recovered its earlier losses as the retreat in U.S. and Canadian stock markets renewed concerns that slowing U.S. growth will weigh on the Canadian economy. The pair has set resistance at 1.03. Risk aversion also helped the dollar against other currencies as well, such as the New Zealand and Australian dollars. Next week, we will see interest rate decisions from Japan, Canada, and New Zealand. Some other important reports to be released are Canadian retail sales, Australian CPI, and the advance estimate for UK's GDP. And that's it for today. Join us again next week here at CMSFX.com and have a great weekend.